Hi guys, welcome to today's video. Today we're going to be discussing pre-approval and what that means for you, the home buyer, or even the home seller. Let's jump right into it. Alright guys, what is pre-approval? In essence, it is a letter or document from a lender that specifies how much money they're willing to lend you. Many different banks can offer different interest rates, as well as being able to offer different loan amounts to the same person. Some banks have more overlays. Some banks have less overlays, which means some banks can offer you more money and some can offer you less. You might ask, Anthony, why do different banks matter to me? Isn't just any bank sufficient? The answer to this is no. Some banks have extra criteria they add on top of their loan processes, known as overlays. They add overlays to their loan processes to add an extra layer of security to the loans they give out, or simply to require stricter standards above already federally set guidelines pertaining to loans. This isn't too important for someone seeking a pre-approval from a bank because many banks have overlays anyway. The essence of this video is to teach you what makes pre-approval letters so valuable to both buyers and sellers of homes. Imagine you're going shopping for some new clothes or that stylish pair of shoes you've been waiting for. Before you go shopping, hopefully, you know the price of the item you seek as well as if you can afford it. Generally speaking, these smaller items in life are not too expensive, so making financial judgments about them aren't very difficult. But what happens when you want to buy something worth, say, $200,000? Now things can become a little more foggy. For one, most people don't have immediate cash reserves to pay for a home that's $200,000, or likewise any high amount. What's the solution? To get a mortgage loan from a bank. When you speak with your realtor or ask them for guidance, sometimes, hopefully, they'll refer you to one of their own lenders that they've worked with on numerous transactions before. When you work with me, this is exactly what I do. I know my lenders personally, I know they can close deals, and I know they offer incredible and competitive lending for my clients. That's part of what sets a really good realtor from the rest. We want to help our clients, and we want them to get the best deal possible in the shortest amount of time with the least amount, if any, hiccups in between. It's not entirely uncommon for a realtor such as myself to point you to a lender of mine in exchange for a lender you've already found yourself. Some large banking establishments, I'm sure you can name a few, will issue you pre-qualification letters, which are not pre-approval letters. With pre-approval letters, your lender will use the information you've given them, including your work history, income, and credit report, to figure out how much money their bank can lend you for the purchase of your new home. A pre-qualification letter, however, is issued by some banks and websites that you visit that generally only rely on information given by the buyer themselves and can be quite deceptive in the quality and financial strength of the buyer. This is why most sellers avoid pre-qualification letters and only accept pre-approval letters along with the offer you've made. Now, that doesn't mean pre-qualification letters aren't as good as pre-approval letters in some states, because some places they use these terms interchangeably. In some states, pre-qualification letters are just as good as pre-approval letters, but you really want to make sure that the information has been verified or validified by the lender. So we know that the person getting whatever letter isn't just inputting information about their income or their work history or their credit score on some random website. So not to say these terms are interchangeable everywhere, but they can be. What does a pre-approval letter tell a seller or the owner of said home? The pre-approval letter gives the seller of the home confidence that you, the buyer, have gone through the initial screening process by a reliable bank or lender. And I'm using bank and lender synonymously in this video. For example, if you were selling your home for $150,000 and two potential buyers submit offers to you through their agents, which one would you choose? In most circumstances, the best offer, right? But what if one buyer offers you $150,000 with a solid pre-approval letter, meaning, generally speaking, they're going to get the loan, and the other buyer gives you an offer for $170,000, but either cannot get a pre-approval letter or they simply don't have one? As your realtor, I would ask the higher offer if they could acquire for me a valid pre-approval letter. If they could not, you would be, in theory, gambling on accepting their offer, no matter how high it is. You don't want to be just a few days away from closing on your home and find out that the buyer has been rejected for a loan. By this time, the buyer who offered you an offer with a good pre-approval letter has probably already found a house, and you'll be stuck relisting your home, waiting probably another 30 to 45 days to sell it, 5 to 10 days to find a good buyer, and another 30 days to close the deal. This process takes a good amount of time because the lender, the title company, and any attorneys involved need time to finish their side of the work. Let's move on to another reason to get a pre-approval before looking at homes with your realtor. Let's say Sally calls me on Tuesday, and she says to me, "Anthony, I'd like you to show me 123 Main Street South at 4 p.m. I'll usually ask Sally if she has a pre-approval letter because many sellers require it before viewing the home and require it almost always with any offer. There's a few counters I get from people. The worst one being, well, is it any business of the seller to know if I'm pre-approved or not? The answer is yes, because they are the ones who decide who is getting their house or not. But the more common counter I get is, well, we kind of just want to see the house first. This is perfectly fine with me. In fact, I'll show them the house most of the time. But the reason this is not good for Sally or any home buyer is because let's say that house she wants to see on Main Street is $300,000. What happens when Sally finally decides to get pre-approved and finds out she can only get pre-approved for $200,000? Because let's face it, a $200,000 house is much different than a $300,000 house. I've seen it too many times where a buyer sees a house they like and cannot get pre-approved for that much or pre-approved at all. This, in my experience, does one of two things to that buyer. Every house they look at afterwards in their proper price range after they find out, they hate. They despise the houses. They compare them to the more expensive house that they found out they weren't able to get approved for. So every house afterwards is just kind of, not as nice. Or, the second reason, they lose all motivation completely and give up on buying a home. I don't want you to do that. This is why knowing how much money you can borrow is the most important step to buying a home. Well, guys, that pretty much wraps up today's video. I hope you learned a lot about how my career as a realtor operates from day to day. And I hope you also learned why getting pre-approved is so important to both buyers and sellers. If you liked today's video, please give it a thumbs up and subscribe for more incredibly informative content. If you live in Ohio, I'd love to help you find whether it's your first home or the home of your dreams. If you have any questions, give me a call. I'll leave my information in the description. This was Anthony Bernabei with the COPE team at RE/MAX Edge Realty. Thank you.